I hope you guys are gonna hear me good from this one, cause shit. Please let me know once you're on there so that we can kickstart. And I guess the first question that I have for you guys is, what would you like to backtest on, forex or futures? Like, how many of you are more like forex, and how many of you are more futures? Now, me personally, I don't really trade forex like that. I never actually do trade forex. I'm more into futures, like I was saying to EC the other day. So, but we're gonna do what the majority says we're gonna do. And you can reply. I guess you can reply in Discord or maybe in the chat of the of YouTube if that's easier. I would have loved to have like a more direct conversation, like a more vocal conversation with you guys, but I need to figure out how to do that properly on Discord because I follow some people who do it perfectly on Discord, but I still need to figure this shit out. All right, this white background is pretty annoying to me, so I'll just go back to the dark look because everything is set up to be dark on my chart, so it's just easier for me. Right. Right. So while I'm waiting for you guys to answer, I'm just going to do a quick recap on how the week went on futures on both S&P 500 and no, we can't. I think we can still call each. We can't really conversate on YouTube. We can still call each other. I mean, use the voice call on Discord. But like I said, I don't necessarily know how that works. So you're going to just, for the time being, you're just going to have to ask questions in the chat, and we're gonna go from there until I figure this out properly for the next session. All right. So like I was saying last week, at least on futures, I'm going to start with futures because, like I said, I'm waiting for you guys to tell me if you prefer forex or futures. Please, just tell me. All right. But because futures is my preferred, it's my favorite. Let's start with what happened last week. So last week, my bias was literally bearish. Everything that you see here, I was expecting a trade in this area. I deleted that, but I think if I pull up my Telegram, you'll see it. So I had a trade. Where is it? Actually, maybe it's on the other one. Hold on. Load the chart and AMT. Is it this one? Maybe I lost all of my analysis, which will be annoying. Oh, there we go. So yeah, I had an entry here at this precise point on a daily chart, right there, and I'm still targeting this, you know, should I call it base or balanced area as my final target for next week. I don't know if EC watched the video 18, episode 18 from ICT. He That episode is absolutely amazing because I feel like that's the one episode where he recaps everything that he's talked about so far on his channel as far as daily bias, order blocks, everything you can really think of, really. Like, wait, he touched on the order blocks. He touched on imbalances. He touched on the fair value gap. He touched on how to backtest his concepts. He touched on daily bias. He did not touch on weekly bias, and I think that's about it. So if you watch, episode 18 from ICT, you would. I'm sure you're gonna love it. So that analysis stays the same. So I'm going to do the same. I'm going to cover in this backtest. What he has talked about, starting with the daily chart, and how also I do backtest his strategies the way he showed it in that episode. But before we start, just so we clear, I'm still bearish for next week on futures S&P 500. Now on Nasdaq, it's a little bit different because on Nasdaq it's like we already reached this point that I was eyeing last week, and we're getting close to this area right here. Possible POI on the daily chart. So we'll see. I'm still bearish on S&P, but Nasdaq is quite iffy for me at the moment. I was looking at this area, but then I changed my mind, so I'm not too sure what it's trying to do. Actually, if I put a 50% thing here, yeah, it lands. So I guess we can still say that we're bearish for next week on Nasdaq as well. But I wouldn't stay fixated on that. I'd rather stick to S&P for the time being. So how do I do my my analysis? So let's find a date, or how do I do my back test, if I should say it like that. Actually, you know what? Fuck it. Let's use what actually happened last week. I'm going to delete all of this because I already know at the back of my mind what is it. Actually, no. I'm not going to do that. I'm not going to do that. That's stupid. Let me just change the chart and come here. All right. So on this one, I'm going to show you how I'm going to use last week to backtest, if that's going to help. I'm still waiting. If you have any questions or any propositions, that'll be welcome. All right. So last week, we're talking about. So this was Friday, Thursday, Wednesday, Tuesday, and Monday. So the market was here last week. And the first thing that I usually do that I want to look at is, depending on how we closed, how the daily closed, what do we have behind? Like, what do I mean by that is, like, considering the fact that we're currently trading within this range, like this entire range, the first thing that I look at is, okay, cool, what is the daily trying to achieve? And last week, just like ICT said, pretty much the same thing. We had this high right here. All right. Now, did I expect this to be like a grab of liquidity and, coming back to the downside? Fuck no. You can never predict that shit, right? I mean, only ICT can do it, but I know, God knows that I can't. So after this grab of liquidity, this was how Friday, 2 weeks ago closed. In my head, all I was looking at is this area. Where is it? Let me just find. Okay. The only thing I was looking at, that I was focused on, is this area. And like I was saying in the video that I did for EC, the only reason why I was looking at this area is basically everything that ICT teaches us on a 2-minute chart that I just transpose on a daily chart. You know what I mean? Displacement, imbalance. I expect a trade here. So I expect the market to come up here, act bullish for a while, and then drop. So from that point, because we're talking about like weekly analysis or weekly bias or whatnot, my weekly bias was bearish, and I was expecting a move to the upside into this imbalance and then drop. All right. So what I mean by that is that in this imbalance, I want to see ICT's pattern. So since we're talking about bullish market, I expect to see something happening, something of the sort happening, giving me an imbalance somewhere here so that I can drop with the market, pretty much like that. So in my analysis, Monday was going to be bullish. Wait, Actually, let me see if I can find it again. What about the gap above the equal highs? I'll touch up on that. That's a good question. I'll answer that question, and I will tell you why I did not consider it and why it was too early to consider it as well. I was expecting anyway. I was expecting Monday to be bullish. Oh, I made a whole video for it. That's why. It's oh yeah, there you go. So, but bullish for Monday and Tuesday, depending. Also, yeah, there you go. I'm bearish for the week, but bullish for Monday and Tuesday, depending on Monday price action. So that was it precisely. So to answer Neil Pereira question, he says, what about the fair value gap that's residing above here? The way I look at things is per zones. So the market, over time, the more you study ICT, the more you're going to realize that some things. And one of the things that I realized that is just absolutely true, and you can go on your chart and test it. The market evolves in this form, all right, in these phases, impulse based impulse. It's not a new term. All these people who are teaching smart money concept talk about it. Some are going to call it impulse based impulse. Some are going to call it rally based rally. All right. I just like the term impulse based impulse because I remember it faster. So in this sequence here, when you look at this entire range, right, you have impulse, base, impulse. Okay. That's one. And after that, you have a push to the 50% of this impulse based impulse. And then you have a break to the downside. Once the 50% breaks this downside and comes back up, I don't necessarily expect it to go all the way up here before and leaving this, imbalance up here, because it makes no sense. All right. So even if you were targeting, let's say, even if you did not see this, right? Let's say if the market was here, right? And you were expecting a grab of liquidity of these equal highs, your attention would have been drawn in this imbalance, not this one, because this is just too far away. And don't forget, this is a daily chart. It's not like the market is going to run up, 2,000 points. Well, not 2,000 points. I'm exaggerating a little bit, but it's not like the market is going to make this distance, this entire distance, in like one day. That's just like madness. I've never. It's not something that happens often. It can happen, but it's not something that I would necessarily anticipate. I'm going from zones to zone. This is zone number one. This is zone number two. If it gets here, well, fair enough. I'm just waiting for some ICT, ICT concepts and patterns to happen there, and that would be it. Now we got to this point and the market gave you this. There is no point for you to expect for the market to come here. Why? Because you have the displacement. This displacement is all you need. All right. Soon as you have your displacement, there is no point for you to start thinking, oh, but maybe this is a fake out. Is going to come back up here. No, the market already gave you a signal. There's an episode in which ICT says that the market shows you its hand. I think it was like episode 3 or episode 4. He used a term like that to say that, oh, wait for the market to show you its hand, to before you make a move. Soon as you have this displacement, this is what he talks about. This displacement is the market literally showing you its hand. So for you to be expecting the market to go up and break this high again, it's kind of like, should I say, a little bit too it's kind of ludicrous as per ICT teachings, if that makes sense. So from this point, you have the displacement. Well, this is how Friday closed, and you have another imbalance down here. So what we expect the market to go further down. Further down where? Further down to below this equal lows down here. Now, why the equal lows? Equal lows because earlier I spoke about impulse based impulse, right? What do you have here? You have a swing to the downside. We retraced, never broke it, and then we expanded to the upside. This area was never tested. All right, this is what ICT would call, um, how does he call it again? Is it market structure, market breaker, or something breaker? I forgot all the terms sometimes that he uses, but he calls this. This is where he talks about shit. I'm trying to remember the name. The breaker. I think he calls it the breaker or something like that. So this is going to be your breaker, and once you break it, sorry, let me just remove this. Once you break it, right here, you get your market structure shift, pretty much. So once we break this, we take out these lows. That's why I said earlier that my take profit is in this area, which has this tiny level of imbalance of balanced market, or what someone else would call order block. If I go on a 4 hour, you're going to see some balanced market in that area right here. It's quite balanced. It's not the most balanced market, but it's balanced to the upside. All right, so I'm waiting for, this is where my target will be, and from this point I would observe the market and see what the market is trying to achieve. Do I make sense so far? Easy. I know you said you were struggling with the daily bias. Does it make sense so far? Breaker block. Yeah, that's the term. Sorry, I forget sometimes. I have so many ICT terms in my head. Sometimes I forget some of them. Anyhow, so now I had my daily bias for the week. Now, from there, I used to drop to the 4 hours, just to analyze a little bit. But ever since ICT was clear that he always goes from the daily to the 1 hour, I've been trying to do the same. And from the 1 hour, now this is the part where I may confuse you a little bit, but I'm not trying to, I promise you. I do not, so I'm on UK time, right? So ICT talks a lot about US time and midnight and everything. So midnight in UK is 5 in the morning. Midnight in the UK, so midnight Eastern time in the UK is 5 in the morning. So whenever ICT tells us that, or set up your chart exactly like mine with US timing and stuff like that. Honestly, I don't do that because, well, as I was saying to run yesterday, I just know how to convert these, and I'd rather keep it to my UK timing. But for the sake of the back testing, let's just use US timing, and hopefully I don't get confused as shit about that. So the first thing that happened, like I said earlier, I was bullish on Monday. This move when Friday opened, I remember me and my friend, we were like, "Oh, we just going to take a buy, straight away." And I took a buy from this point because I was expecting a move up here. Now, why exactly was I expecting a move up here? One way that I trade is that I don't just trade ICT, because if I'm waiting for ICT patterns to form, I would be waiting all day. So I'm trading auction market theory as well. So I have I have a huge help, the huge help of the volume profile to guide me every now and then. So at this point, when I see this imbalance, I ask myself, okay, there is nothing here in this imbalance for the market to stop here. Like, it's completely empty here and it's completely empty here. There is nothing in the back. It's too far back if I'm looking for something, so there's no point. So where is the market likely to have a reaction from? When I turned on my volume profile, the POC was sitting here, and you have this huge so-called order block at this level, right? Okay, you have this huge order block at this level. However, the position of this POC was kind of iffy to me. You know what I mean? I just thought it was just too far up. Like, why would the POC be up here? But I don't want to confuse people because we're supposed to stick to ICT. But if I'm being honest on how I'm backtesting and how I do my analysis, for the most part, I use a lot of volume profile as well to help me. So at this point, ICT has a rule that says when you analyze the market, you're supposed to look at, the past 3 days to see what the market has done. And when you look at the past 3 days from Friday, you see that on Thursday, Wednesday, and Tuesday, the market was pretty much balanced. You know what I mean? That this is a balanced market right here, even though it may not look like it, but this is a balanced market. So I'll put my balance volume profile at this area, and it says that the value area low is at this area, okay, instead of the POC. So my trade, I was waiting for my trade between this area and somewhere around here. It was a 10 pip stop loss or 10-point stop loss or something like that. I feel like there's a lot of boxes so far. I need to delete some of them and change this one to POI. So this is how I was looking at the market. This is how I was looking at the market last week. So this is where I was waiting for my trade. Not necessarily because this was an order block. This area was interesting to me from an ICT perspective, but when I turned on my volume profile and auction market theory and whatever, the way I trade, you have a P shape here or whatnot. This area started to look very interesting at that point. However, even if we have to stick to ICT, this is the part where ICT episode, what episode is it again? I think it's episode 12 or 13, where he talks about advanced market structure or whatever. No, wait, is it advanced market structure? No, sorry, market structure for technicians. I think that's the terminology that he used. So even if we use that, although it's not on a 2 minutes, you can still see ICT on a higher time frame if you just pay attention. I'm sure like you already know it, but just for the sake of information, I'll just throw that out there. Why? So you have this swing, bull swing up here, okay, gets taken out, all right, grab of liquidity, and we come down here and we break this, all right. So this become a breaker, we break this swing. Once we break this swing, what do we have? A retest into whatever imbalance is residing at this area. And if you don't see the imbalance, you can clearly see this on this candle right here. This candle doesn't have a wick up there. It's still considered as an imbalance. Now, after that, this is what ICT calls intermediate high, I believe. Intermediate high, we break the long-term low. All right, I think that's how he calls it, long-term low. Yeah, you break the long-term low. What is most likely to happen, as per ICT teachings, is that we come back and retest this long-term low and drop. So from an ICT perspective, this is his approach to advanced market structure. So all these things were lined up for me to believe that, oh yeah, we definitely bullish on Monday, and we likely going to see some moves on Tuesday to the downside. So from there, it was just a waiting game, really. Drop to the 15-minute, as per ICT. This is supposed to be midnight. Right. So 15 minutes, as per ICT. And I was in this trade, was I? I don't even remember. I know I was in a long trade on Monday, but whatever. At this point, oh my god, this is so confusing because I've never used this US timing. I always use UK timing, but I think he says 8 in the morning. So 8 in the morning is the start of the US market, I believe, somewhere around here. I think no, 8. Is it 8 or 9? Shit, the fuck knows. So I think it's 9 or 8:30. Okay, 8:30 we get to this point. Now this is the part where I turn up to the market to be very focused. As per ICT again, down here you have sell side liquidity, right? Sell side, and up here you have the high of Friday, which is buy side liquidity. buy side liquidity, just like this. And from there, all you wait for is to have some ICT stuff happening. Now, again, I am only looking for shorts. Yes, on Monday I was in a buy trade, but that's mostly because I knew we were supposed to get to this area. So it was more of like it had nothing to do with ICT. It was more of like a gut feeling because I'm just used to look at the market. But in reality, my trade was supposed to be or was up somewhere up here, right? This is where I was expecting to take a trade or whatnot, based on ICT market structure, advanced market structure. So buy side liquidity, the market gets there, and you just watch the play at this point. I don't really stress too much when things like this happen. Boom, we're here, and you just wait for the play. Now, at this point, this is where you wait for ICT stuff to happen. So this is Monday, bullish Monday. It was a profitable day. It's fine. Still a part of the analysis. Now we wait for some ICT stuff to happen and take us down with it. Now, here is something that takes me at times when things like this happen. So you see this on a 15-minute, and it can get sometimes confusing, and you turn around and start thinking that, oh, this looks like an ICT pattern. And if I'm being honest, I still don't have the reflex, or I don't have enough experience to gauge whether or not this is part of the ICT concepts, because sometimes it would do this and continue to the downside and go without you, and sometimes it would do this and completely reverse on your ass. So what I like to do is that when I see this, I just let it go, because I got burned so many times trying to chase this trade or chase this, thinking that it was a part of ICT concepts. So I learned to leave it alone. So at this point, we Tuesday, and where is midnight? I'm looking for midnight. Midnight is not here yet. Do you guys have any questions so far? I don't want to feel like I'm going too fast. It's 8:30. All right. Thanks. 8:30. Here it says 9:45. God damn it. 8:30 here. Okay, cool. There is something that I saw Ron doing the other day, and Ron, you can explain it to me as well if you want to. I don't know how we're gonna sort this out, but next time. So I saw Ron, on one of these trades. I think it was on Thursday that he did it, and he identified the buy side liquidity somewhere to the right next to the open of the U.S. market, and I thought that was pretty interesting because I've never thought about it like that, and I was wondering why he did that, but I did not dare to ask the question for some reason or whatnot. So, and also, although I identified Friday as the buy side liquidity, this as well is buy side liquidity because you have obviously relative equal highs or whatnot. Now, here's the thing. My question right now is, would you take this trade? Because check this out. If you have this buy side liquidity, right? So this is just back testing, right? So we ask ourselves questions, we interrogate shit, right? So you have buy side liquidity here because on Monday, this was the high of Monday, this was the low of Monday, right? You have buy side liquidity here, and this one right here happens. Isn't this considered as ICT? If you know you want to be bullish, isn't this considered ICT concept, a part of ICT concepts? Would you take this trade? I don't know. Sometimes I debate this. Sometimes I take it just to see what it would feel like. But really, if you look into it on 5 minute, you're going to realize that this is just perfect ICT. Really, it's nothing. Just perfect ICT. So sometimes I wonder if this is a trade to take. If because I saw Ron taking a trade like this, so I know he can definitely answer this question. But for the time being, I just let it go for now until I figure it out completely. But it's it would be interesting to know. I think according to ICT, you wait for that low first to be taken, which should give some sort of imbalance, then give you an ICT setup. I agree. The thing is, sometimes if you wait for it, sometimes it doesn't happen every day. So what if you're the type of trader who wants to trade every day? You know what I mean? I 100% agree with what you said, but if you want to trade every day, sometimes you're not going to get because the way ICT says it, I think he says every time you expect a move or a significant move to the downside or the upside, you have to anticipate a run on liquidity in the opposite side. The word anticipate here is very important. It's a key word. Like, you have to make sure to know what it means. Anticipate, which means it may happen. It may happen. It may not happen. Literally, regard as probable. It's just a probability. So the market can literally leave without you. The main reason why I asked the question is because Monday clearly was bearish, was bullish. All right, this is Monday right here. Actually, this is actually a good case study. This is Monday right here. We are clearly bullish. Why did we not get a grab of liquidity to the downside? All right, because he says the kill zone is between 8:30 and I think it says 3 p.m. or 1:30. Wait, 1:30? No, 8:30 and 10 on 11:30. I think. Yeah, he says if the trade doesn't get you, if the market doesn't get you in a trade by 11:30, you should forget about it or something along those lines. That he says maybe it's 12:30. I don't really remember. His all these U.S. times, but literally around this area, during this time, you should have had a grab of liquidity to the downside, but you didn't. And my question is why? How do you anticipate this? If you want it to be bullish and we're waiting for ICT on Monday, you wouldn't have gotten into the trade. All right. So how do you anticipate this? That's my question. The low at 45.66. The low at 45.66. 45.66. Then observe the movement. I'm not sure I understand what you're talking about, mate. The low at 45.66. Then observe the movement. I'm not sure I know what that means, mate. The low at 45.66. This is the low at 45.66. So what's there? There's no ICT there. This is 1 p.m. U.S. time. At this hour, the market is like 2 hours away from closing. So we are way far away from ICT kill zone at this point. I'm not too sure I understand what you mean by 45.66, mate. I'm not too sure. Well, anyway, so let's move on to Tuesday. I hope Run has an answer for this. It'd be amazing to know how to deal with this kind of days. ICT pattern here, but there is no grab of liquidity to the downside. How do you deal with this kind of days? I think I have an answer, but I'd like to see what you guys other people think as well. So Friday's moving. Let me just mark midnight. I said Friday. God damn it. Tuesday is moving. This is midnight on Tuesday, and this is 8:30 on Tuesday as well. 8:30. So far, this is the low of the day. This is the high of the day. Let me just take this out. We don't need this. All right. So let's move forward and let's see what the market gives us. Boom. We are up here tapping into this area, and this is where I'm waiting for my ICT setup, all right, to see how we're gonna get this. Now, if I'm being fair, I'm already in this trade at this point, because it's tapping into my area. Volume profile tells me this is the area, this is where I'm putting my risk. So I don't need necessarily to wait for the ICT pattern. But in case you wait for the ICT pattern, then where do you take your trade? So that's why I'm trying to investigate, because I don't remember seeing any ICT pattern on that day. So let's see what we get. 8:30 is not here. All right, this is where we are. So at this point, I'm identifying my buy side liquidity, which is up here, my sell side liquidity, which is down here. All right. Now, again, another question. Actually, it's not a question. It's something that I've noticed. This as well can be easily confused as ICT. Literally, you can see this and think to yourself, not even confused, but you can see this and think to yourself like, oh my God, this is ICT. I should take the trade. Funny enough, you wouldn't be wrong because, well, you have what the imbalance here. If I go on a 5 minute, oh my God, this is getting slow for some reason. Funny enough, you wouldn't be wrong because, well, you have the imbalance here. If I go on a 5 minute, I hate when TradingView does this. It's fucking annoying. All right, it's back now. So I was on a 15 minute, and yeah, like I was saying, when you look at this, would you consider this as like ICT pattern? Because it's on a 15 minute, and you do have a grab of liquidity of Tuesday. You know, this is Tuesday buy side liquidity. You have a grab of it, and then you have a displacement. So is this enough to look at it and think, oh, this is ICT? To me, it is enough. You know, to me, it is enough. All I want to see is the parent imbalance. Oh my God, another amazing gem from ICT's previous video. The parent imbalance, the way he named it is absolutely amazing. So the higher time frame is likely to give us the bigger picture imbalance. All right. And the lower time frame, if you only stay focused on the 5 minute, you are likely not going to see any imbalance down here. All right. But if you're trying to look for the imbalance on a higher time frame, if you try to look for the imbalance on a higher time frame, or at least if you see the imbalance on a higher time frame, you identify and walk your way down to the lower time frame. It becomes easier to identify the area in which you want to trade. If I'm being honest, when I identify my imbalance is always from this point. You see, like on a higher time frame, whichever time frame that has the parent imbalance, I'm starting from, the order block candle all the way to the imbalance that's somewhere up here. So if I go on a 15-minute chart, my imbalance would have stopped literally here. This is where my imbalance would have stopped. This is where I would have waited for the trade. But I think this one failed on this day. This one did not work on this day. Because I remember seeing this and I was trying to scalp the market and, just being greedy and think like, oh my God, let's go, let's do it. But it did not work. I don't remember. See, yeah, this shit happened. And that was absolutely mental. I was like, what the hell happened? I don't even remember if this was a news day or something like that. It just came out of nowhere. Absolutely. So, how do you deal with these days? You have a grab of liquidity from here. You thought this was the grab of liquidity. You wait for a trade here. Boom, you get stopped out pretty fast. All right, I got stopped out on this day, but then I re-entered somewhere down here. You get stopped out pretty fast, and then boom. The question is, what happened here? Was it a bad idea to consider this as buy side liquidity instead of this? These are some of the questions that I have. Like, if the day is developing right, and you have a day that closed very bullish or very bearish, like this day, okay? Would you consider this as the grab of liquidity or the buy side liquidity, or you still wait for the market to develop all the way till 8:30 and then you identify the new buy side liquidity if there is a new buy side liquidity and consider that as the actual buy side liquidity or sell side liquidity instead of considering the previous day as buy side or sell side liquidity. A couple of questions that I have that I hope I would get an answer for one day, but for the time being, yeah. Turtle soup. I don't know what that means, mate. I really don't know what that means. So this is where the entry was, or something like that, and this is where you wait or anticipate for the ICT stuff. So he said once you see this happening, grab of liquidity, displacement, you jump on a lower time frame and start looking for an entry. So where would the entry be here between this candle and this candle for me? But as per ICT, you need to wait for your trade inside of the imbalance. What I like to do is see what the market tries, will try to deliver on the higher time frame, but it really depends because sometimes I have all three windows open. So let's see how this market develops and how we can take this trade. Took out sell side liquidity of Tuesday. Now we fucking wait. Right. For me, I've gotten to a point where I just don't care. I'll just put my entry here because that's the imbalance and wait. Well, as per ICT, what do you say? You put your stop loss up here, but that's a 15, 16 point stop loss. That's mad, that. Absolutely mad, that. Wait, let me just try to find out at which price I took this trade. ICT said we should look for Judas swing around 8:30, and I remember him saying something about taking a trade around 9:30 in the earlier videos. Around 9:30. Yeah, I know about the Judas swing. This is probably the Judas swing that you're talking about. This one right here. I assume so, but I will look into this. Can you please give me the name of the video where he talks about it? Because I do understand, I do remember him talking about the Judas swing. I just don't. I think it was in the optimal entry video. Yeah, optimal entry video. That's where he talks about the Judas swing. But can you remember what video it is? I'm trying to find where I took this trade on Tuesday because I don't remember at which price I took this trade. Jesus Christ. I can't even see it for some reason. I don't know why my data is completely fucked up, but alright, fair enough. Oh, fuck it. I guess we're going to go for some trials and errors. Okay, so let's do this. What does it look like on a 15-minute? Now, look at this shit. This is our imbalance on the 15-minute. Sometimes it can get really confusing. Would you consider this as your entry, or would you consider this area as your entry? It can get confusing real fast sometimes. And you're left without us. I don't even remember where I took the trade. I know I scalped. I did scalp Tuesday, but I don't remember where I took the trade. So where should we have taken the trade here? Right here? Isn't that a little bit too far as stop loss? That's pretty mad. That's too much. It's like 25 point stop loss. Who's going to do that? That is pretty mad. So let's jump down to the 2-minute chart. There's nothing on the 2-minute chart neither. Not much that we missed. So this is the part where my friend calls it ICT ICT failed. He calls it ICT failed. So where would you have taken the trade here? And don't say here, because I know you wouldn't have. It's too far down. As per ICT teachings, it's too far down. Why would you have taken the trade here? Is this a mistrade where you just go to bed and, you know, you take the L? Or am I missing something? I don't know what I'm missing here. I really don't know what I'm missing here. Why did this not work? Or let's say if it even worked, but where could have been the entry? I'm trying to debate like, is it is it worth thinking that the entry was actually here? Because as per ICT, yes, it holds. You know, you have the displacement, the first should I say pullback, and then this happens and you retesting the imbalance, just like ICT says. But Jesus Christ, ICT also says that your stop loss should be up here, and this is crazy. Even if you took the trade in this imbalance, this stop loss is crazy. Why? Why would you do that? What kind of risk management is this? You know. So I feel I'm just going to put it in. You know, failed, failed day. I'm still in this trade from the top here, but maybe I just chased the trade on Monday because I knew it was going to go down. So I just chased the trade and I entered wherever because I just knew it was going to go down. I don't think I probably had any ICT related reasons to jump in this trade. It was maybe related to the VWAP as well that I took this trade. Nah. Anyway, well, that's a Monday L. So how is this line? Oh, you can't even see the daily like that now, can you? Yeah, because it's the backtest bullshit. You can't really see the Monday like the daily chart like that. So this is where we are on a 15-minute chart. We are left with this imbalance right here, and sort of left with this imbalance as well. Wouldn't count it too much if I'm being honest, but who knows? The market may come back and grab this before continuation. Because at the end of the day, we have a swing, we have a swing, so we have a base right here. So we could have a reaction here for Wednesday. So let's play this and let's see how what the market gave us. Midnight. So far we are zero trade in a week as per ICT. I don't count this trade because, well, maybe you can count this trade because like it was a long term trade from the daily, but as far as like day to day entries, so far I haven't seen a trade. Maybe because I'm doing this while I'm talking and I'm not paying close attention, but I haven't seen a trade. And you're not going to tell me, oh, there was a trade. I missed this. This wasn't a trade. No one would have taken this. I don't see anyone taking this. Also, one thing that I want to note that I want to point out is what about the next? Wait, so what about the next high low? The next high low, or do you mean this as an area to take a trade? I mean, yeah, if you understand, if you're very good at market structure, I guess you would have trusted, you know, taking the trade here. But I personally wouldn't. You know, if I were to take a trade, it would have been here, somewhere here at this exactly where you actually had this pullback, but not this right here. I wouldn't have taken a trade here to go down. It's just yeah, gamble. Anyway, I wouldn't have taken the trade here to go down based on ICT. I would have used probably a volume profile because clearly we are going back into a previous range of previous value area range, which would be the main reason why I would have taken this trade. But based off ICT alone, no. Based on market structure, probably. But in live market, if I'm being honest, knowing that there is this imbalance left up there, up here, I wouldn't have looked at it. I wouldn't even have hoped anything from this market. But on the next day, I am definitely looking for a trade in this area and in this area. That's it. Because I already know my long term biases, or at least my weekly bias is bearish. We are only what, Wednesday on this day, so we need to continue down anyway. So I have these two possible entries or area of entries. Maybe this one, but I don't count on it too much. We have these two possible entries that are, you know, the more most plausible for entries. So yeah. But on this day, on Wednesday, oh sorry, on Tuesday, I wouldn't have taken this trade. No way, no way. I think it would just be a lost trade for me. I believe the fib will have given a good confirmation, 100%. But guess what? Even on the fib, this is not even a good confirmation because the ICT pattern on the fib, you know, that's the OTE, right? I hope you know. I think you know that by saying what you said. Look at this. This is not even 50% of the fib. I know exactly what you're talking about. If we were to go on the fib or we were to put the fib on, our entry would have literally been here. 100%. 100% agree with you. But this did not even reach the 50%. So this wouldn't have been a trade. Even if you say, oh, you're on a 15 minute, you should have gone to the lower time frame. I did that earlier, and this is what we got. There's nothing here. The market completely left without us. So this is one of, again, like I said, this is one of these days that my friend calls ICT failed. You know, the only place you could have taken a trade was here, around this area. After this break of structure or change, market structure shift, right here. If you put your fib, your entry, as you can see here, it reacted perfectly. You know, 70%. We've taken your trade here, stop loss up there, and ride it. But something happened in the market, and you got stopped out. That's pretty much it. Even per ICT, because ICT says your stop loss must be, you know, above the liquidity that was grabbed. So you would have been definitely stopped out here. From the high of 45.72 to the low of 45.43. 45.72 from the high, 45.72 to the low of 45.43. The low of 45.43. You would have put a fib here based on what? That's interesting. I wouldn't have done that. I, I don't I don't use fibs like that. The only time that I use fibs is for what, standard deviations, um, ICT OTE, and the pivot points. And I also created a fib for a way that I'm seeing the market, but I don't really use the fib as it is, commonly used. So that's interesting that you say you could have put a fib here to get a trade, but no, I wouldn't have done that because I don't trade like that. So, but if you personally trade like that, hey, sure, if that guarantees your result, definitely do it. You know what I mean? But I don't trade like that. If it's a day, I would have taken an L and just call it a day and wait for the next day. But a fib here? What, 61.8? Wait, hold on. Let me investigate this shit. And why? First of all, why would you put a fib here? What would be the reasoning? The reasoning. Oh shit. What exactly would be the reasoning here? Because yeah, it's one thing to say, okay, you would put the fib, but what would be the reasoning? 61.8 imbalance. If you tell me market structure, okay, fair enough. Yeah, I guess that would have worked, but it's still a good trade. I wouldn't have done it. I wouldn't have taken it. I don't trade fibs like that. The market maker coming for ICT traders with the stop with that stop hunt. Oh yeah, 100%. 100%. That stop hunt was mad. It was out of nowhere, man. Out of nowhere. Based on the low that taken shift in market structure. What, based on this? Well, you see, okay. I think if I get your point, I think what you're talking about. I think I know what you're talking about. Okay, so let's go on this video from ICT. What is it called? ICT mentorship. I think it's episode 12. Mentorship episode 12. I believe it is episode 12. Or is it not? All right. I think this is what you're talking about. Something related to this, right? All right. This ICT, market structure, advanced market structure thing. Is this what you're talking about? So we tapped, so we took out, we straight up took out the sell side liquidity, and based on this low, the market retested from here. We broke this low, so you put your fib on to continue to the downside. Just slightly a little bit like what happened here. Is that what you're talking about? I think that's what you're referring to. If I get you right, maybe yes. Yeah, probably. I personally wouldn't have done that because the reason why I believe this ICT advanced market structure works is because you get the alternative. So I said the alternative. God damn it, you get the intermediate term high. If you don't get the intermediate term high, everything here to me starts to feel like sort of gambling because one of the reasons why I think ICT showed us this is because it represents a sequence. It's because the market moves in a sequence. That's what I think. I could be wrong. We are here to help each other. Don't forget that. So I could be wrong. If you think something different, please let me know. But I think it's because there is a sequence, and the sequence is as follows. If you had to draw it, the sequence would look like this, right? So the market is going up, you know, basic market structure, whatever. We grab liquidity here, long-term high, long-term low. Okay, you get your intermediate high, which is what the test of the imbalance that's residing, you know, after the displacement. Okay, and from there you get all these little, short-term high, short-term low. But from there, let's just say we break straight away below this area. Then yes, 100% I agree, you get the retest and you continue. It's a whole sequence. How do you go from this sequence to this sequence? That I haven't experienced. That I don't know. I feel like if it was a thing, maybe ICT would have warned us about it. But then again, I understand that you have to be loose with the market and explore different ideas and different possibilities of the market. But so far, every single time that I've seen this ICT thing happening, it respected this sequence every single time. So, but you could be right as well. Maybe I need to start looking at it from this perspective as well. Who knows? Remember, he said that the intermediate swing is also a candle that comes to fill an imbalance, which is what happened. No, it did not. Wait, am I missing something? Okay, that comes to fill an imbalance. So what you're saying is we considered we are considering from this test of this imbalance, we are consider the imbalance being filled or tested. We don't want it to be slightly higher. Is that what you're saying? If that's the case, then yeah, sure. Why not? But is it okay to also look at it from that perspective? I'm just asking. I don't have all the answers. I don't. We are learning. I'm just learning. I'm just learning. So tell me, is that what you're saying? So what you're saying is because ICT said that the inter. So what you're saying is based on what ICT said, which you reiterated. This is technically our intermediate term high. Is that what you're saying? I can't wait to read your answer. I just want to know. If you say yes, then I may gonna start looking at things from that perspective and try to study that a little bit harder and see how I can improve on that. What I'm saying is that we don't expect the 45.72 high should be violated. Oh, 100% I agree. 100% I agree. But is there not a certain, should I say, a degree of pullback that we should be expecting after the displacement? Like, is this pullback enough? Because you said something very interesting, the OTE. And one thing that I'm telling you, and you can go and test it everywhere, the ICT pattern is 100. First of all, it's the OTE. That's what he has taught. He's been teaching us in past videos. Optimal trade entry, market maker, sell model, buyer model. It's freaking the same thing. It's the OTE. So I've been assuming that for this to work the way ICT has shown us, the market, or at least the intermediate high, has to come and tap into the imbalance around the OCT. I said OCT, around the OTE area. That's how I've been approaching it, and that's how it has been working for me so far. Definitely an interesting day, though. Can't even say less than that. Easy. Do you have any question? Just wondering. If you do, please feel free to ask. Let's explore shit. Thursday is moving on, and we drop grab of liquidity. Friday. At this point, I'm just playing the market. I just wanted to revisit, Tuesday, because I know Tuesday was a weird day for me, if I'm being honest. Aside from my long-term entry, this day I did not understand what happened there. So 8:30 is coming in play. Let's see what we get from here. Now let me just go back on the 15-minute. Right, so you have buy side liquidity up here, sell side liquidity up here. Oh, wait, isn't this the trade that Run took? Nah, it wasn't. It was something else. Never mind. Market is just spilling. I think I took a trade here on Wednesday, but it was not. So far, we don't see any reason to enter in the market. Buy side liquidity, sell side liquidity down here, and 8:30 just walked in. So let's see what we get. Move down. Go on a 5-minute chart. Do we have a trade here? think this was the trade that. Wait, this is the six. Is this was FOMC day, right? This was Wednesday, I believe, if I remember correctly. But ICT made but ICT made mention of not wanting of not oh sorry ICT made mention of not waiting for the entire imbalance to be filled because he said once it just oh brother I can't read what you just said, bro. Right, let me try that again. But ICT made mention of not waiting for the entire imbalance to be filled. Okay, I get that. Because he said once it's just a week into the imbalance, you can make the trade though. In this case, the stop loss is big. Yeah, I 100% agree with you. That's what I've been saying. I don't, I'm not saying no to taking, I'm not saying no to taking the trade at this level. It's 100% ICT, but the stop loss. We're talking about S&P here. Even S&P CFD, because this is S&P CFD here. Even S&P CFD is fucking heavy because I'm trading at what one lot size. So it's like a 20-point stop loss. I can't afford that just for this trade. Fuck that. Hell no. It's too much. And I guess the question that we need to ask is like, is the reward worthy for such a huge stop loss? Maybe it is. Let me just. Is the reward worthy? Because we're talking about a a 53 points, so it's a 1 to 2 or 2 to 1, depending on how you want to look at it. 2.5. Is the reward worthy? Not for me. I need a 3 to 1. That's my basic target. 3 to 1. It's too large for me, mate. So even if I'm trying to, even by lot size, this is not going to help me. This is chump change in my pocket. Not that I'm. How can I say it? How can I say this? I am not throwing profits in the bin. That's not what I'm saying. But I'm saying if my daily target needs to be, should I say, at least $10 per day, then a trade like this giving me what $3, it's not worth it. It's like a waste of time, in my opinion. For what? Just for the sake of saying that I took the trade? I don't see the point. When I'm already in this long position with what 5 lot size, I don't need it. I really don't. The whole point of scalping is that you want to take a chunk of profit real quick. This feels like way too much hard work taking this position with such a large stop loss. It's just too much hard work. But if it works for X and Y, then sure thing. Hey, you do it. I will look for more examples in this in this type of scenarios because this is definitely ICT. But I'm going to try to see how I can refine these entries, you know, depending on the stop loss, if I can trade them. But I don't think I can. I need the way I see the market. I need to see a retracement to at least the 50% because I started this backtesting by saying that the market moves in this fashion, all right, in this blueprint, impulse based impulse, and 8 times out of 10, this is the 50% of that impulse based impulse. I need a retracement at this point. I don't want to deviate from that. So if the retracement here was at 50%, this retracement was 50%, I would have said, oh yeah, 100%, this is a valid trade, no problem. 50%, we drop, valid trade. But this, I think this is what, 38.2, maybe a little bit further than that. I'm not interested. Nah, nah, no. But it does sit with what ICT has been teaching. No, I'm not saying anything otherwise. It's just the stop loss that's ridiculous. it's kind of weird. Like it feels like I did not trade this week. I don't even recognize whatever it is I'm seeing in the market right now. So we have a displacement here. Do we have a trade or not? We have a grab of liquidity back into the range. Just for training purposes, I will consider this as an entry. Now I know I shouldn't because I don't like this right here, but should I take this or should I just leave it? I'll take it. My entry would be here. It's a nice 8-point stop loss, targeting the upside because I feel like we've been going down a little bit too much. So let's see what we get from there. Okay, got stopped out pretty quick. It's fine, part of the game. I knew I shouldn't have taken the trade, but I took it just because I'm fucking stubborn, I guess. Right, I remember this trade. This is the trade. Okay, this is what I was talking about. So Run, I don't know if Run is still watching the stream, but Run took this trade. I remember it very well. So you had this high, and Run was like, this was FOMC day indeed, and Run took this trade, and I wanted to know why did he take this trade. I remember him taking this trade perfectly, and I was wondering why did he take that trade? Is he even here? Run is not watching the stream. I was hoping we could get an answer for that. Run took this trade to the downside during FOMC, and I was just interested in knowing why he took that trade. Here is a great opportunity, or not a great opportunity, but a great reason to wait for ICT somewhere down here at this imbalance on a 15-minute. But it never came back down here. I remember it very well because I was waiting for this entry, but it never came back here, and it went back up here. And I took a trade here to the downside, and the reason why I did that, it was related to both auction market theory and ICT. So you had this imbalance going on here, so obviously you wait for a trade at this point. You have this tiny grab of liquidity, huge ass imbalance, so you are definitely going to have a trade at this point. You just wait for some ICT pattern, I guess. And let's see, boom, you get tapped in. So as per ICT, you can take your trade here. Stop loss is somewhere down here, and I'm aiming for the upside. Now, are we getting into the trade? So that was end of the day. And the next day, this is what we got served with. Did it go lower than that? I think this is the part, this is what you were talking about, Olaitan. Can I just call you Abdul, bruv? I'm just going to call you Abdul. So this is the part you were talking about. Despite the stop loss being wide, you still take the trade at the imbalance and you just ride it out. The question is, did it work? I think this is when Wednesday night was consolidating and Thursday morning was consolidating as well, if I remember well. I don't remember well. Let's see. And he went all the way up. Alright, I want to talk about this entry because maybe this is why sometimes I miss trades, and I don't mind it because when I do catch trades, they are usually good trades. The reason why I have a problem with the huge stop loss, and I had to find a way to refine this, ICT made a video regarding order blocks, and he said your order block is this entire, you know, move to the downside before the upside. That's your order block. So technically, this entire area. If you wait for the trade between this point and this point, you still get the trade. Now, if you can do that, then why would you have your stop loss this wide? Interesting to know. Let's go on a 2-minute chart and see what it looks like, if you can refine it even more. On a 2 minute chart, you have this imbalance down here, and you have, so we came here, we tested this, we came up, boom. So your entry would have been at this area right there. So let's see, right. So this would have been the nicest entry, but hey, it is what it is. Just wanted to point that out. So this is how I like to refine my entries. I don't like these huge stop loss entries as per ICT. Sometimes they work. I mean, they keep you safe. I'm not saying no, but because of my risk management, sometimes they're just too huge. They're just too wide. I like these like 5 points, 6, 7 points stop loss, max 8 points. But as soon as we start reaching the 10 points threshold for stop loss, it's like I'd rather just give up on a trade and move on sometimes. And here, 15 minutes. Equal highs. Oh, sorry. Equal lows. Got stopped out pretty good here. Equal lows. This is Tuesday. On this day, I believe Nasdaq did something completely different. Nasdaq did not come back all the way here. ICT was moving mad. What do you prefer? Do you prefer trading S&P or Nasdaq when it comes to futures? Can you please take out the video to the left? Oh yeah, my bad. I think the best time frame is just 1 minute. You get good RR. Yeah, I 100% I agree with you. 100%. 100%. I 100% agree with you. My friend Dom, he's always on a 1 minute time frame. I just don't trade it because I feel like sometimes I lose the bigger picture. You know what I mean? Sometimes I get too sucked up into the the 1 minute chart, and I'm trying to catch too many trades in the 2 minute chart because I see market structure everywhere and so easily. So I limit myself to the 5 minute chart and sometimes the 2 minute chart, but the 1 minute chart sometimes is definitely the best time frame to take your trades. So here the market came back down. Here is another ICT fail. To be fair, what is the most appropriate target when you trade ICT? Because this was a good entry. Let's just start with that. This was a good entry. What is the most appropriate target? Now, I told you I always target 1 to 3. Now, if I were to enter like this 1 to 3 wouldn't have been possible. But if I was to enter like this, like I usually do, my 1 to 3 would have been secured. So what's the ideal target when it comes to ICT method, to ICT trading? As per his teachings, it's 1.5 standard deviation after the liquidity has been grabbed. So technically, wait, where is it? So I think it's bullish, boom, like this. So it's like that. Standard deviation. Oh, sorry, I did that wrong. So it's like this. 1.5 standard deviation right there. As per ICT, this is the golden target or whatnot. But when days like these happen where you get stopped out, well, technically, do you even get stopped out on this one? So you enter here, stop loss is below here. Technically, you get stopped out because of slippage and and let's say you were even here. Um, how do you call it? The spread would have stopped you out because the spread on S&P CFD is 1 point. So you definitely would have gotten stopped out on this one. MNQ. Yeah, he shows it on MNQ. MNQ is just too heavy for me to trade it, so sometimes I struggle finding these. these things on SMP. That's why I'm always backtesting SMP to understand exactly how I can, fine tune it, whatever he finds, whatever is doable on Nasdaq. But I did notice that Nasdaq has way more of these setups, and they are way cleaner because the volatility over there is just through the roof. So yeah, Nasdaq is the gold of futures. I am getting myself into Nasdaq slowly but surely. Not there yet, but soon enough. Soon enough. So yeah, I don't know. I'm going to stop here for today. It's been 2 hours. Um, I appreciate that you guys have been here. I'm going to, for the next session, I think I'm going to ask you guys what exactly you would like to cover, because I feel like today went a little bit, all over the place and everything. I was just going with the flow at the moment because it was the first time. But if you agree, it would be nice if you guys, tell me what you would like us to touch on the next time. Hopefully we get more people in here as well to interact with. But for the time being, we did what I've been here what one an hour and a half. I think it's a good amount of time for a live stream backtesting session. If you want more time, then we can just talk about it in a Discord and come up with a better plan that suits everybody needs and expectations. So thank you guys for your time. I really appreciate that. I really appreciate the you gravitating with the idea, and hopefully, yeah, we see you at the next session. I don't know when the next session will be, but we'll discuss on that.